Again, it seems to come around really, really quickly, doesn't it? Well, here we are. It's September the 2nd, and after last month's massive 528,000, something like that, last month, the headline. Big beat last month for the July data coming out in August. We'll see what today's comes with. We're around about the 300,000 for the headline. It's expected that unemployment will remain flat around about the 3.5% level. Anything really below that, and we are talking about sort of full employment, so we've got this really tight jobs market. The data this week has been quite positive as well, apart from that ADP number, which was half the expectations. But remember, ADP had been taken off stream to get for a couple of months to actually get recalculated. So we'll see how close that is. Obviously, it's all in the actual data. Earnings numbers as well, key. Obviously, we've got this very tight jobs market, or perhaps not as tight for the ADP numbers to be believed. Participation rate, 62.1%. Earnings, 0.4%. That will annualise the earnings out at... what's that going to annualise that out at 5.3%? So a bit of an uptick in that potentially. So let's see what the data says, and it's just one data point. The big sort of tick we had was last Friday, wasn't it? When Chair Powell really went with the bullish, the hawkish tone, and we've had a rally in the dollar. Well, not ever since, but the rally in the dollar has continued. Notably, let me just bring up some charts. Get rid of me for a minute. Actually, I've disappeared altogether there. There we are. So I know what we're doing here. There we are. Share my screen. So why am I not on? There we are. Okay, so this is sterling on the daily time frame. Major Cabello, hello, good afternoon to you. This is daily for cable, so you can see a big, strong move under 115 yesterday. If you've got the day, you've got the hourly chart, you can see this clear big blue line down here. That's 115. We spiked to that yesterday. We're back at 115.50 at the moment. Obviously, been a bit sideways action ahead of the data. The big one has been yen. Yen went through 140. It's actually on my chart here, is it? Dollar yen through 140. We're at 24-year highs. You see this cluster here. This is the daily on the yen. Lots of congestion around 137, but blasted through 140. Sorry, I haven't updated the chart here. But certainly, big move for dollar against the yen, and that's been continued. We've got this massive divergence in policy from the Bank of Japan and the Fed and other major central banks. How long both the government and the Bank of Japan very much work very, very closely together. How long they're going to let that run for, who knows? Kuroda's still in charge. He's coming to the end of his tenure. Good afternoon, everyone. Who's coming in? Angela, good afternoon. Anything you want to talk about other than obviously the data that comes out? We'll have a look at that in a minute. Major, good afternoon. Cabello, good afternoon to you as well. So, big old move for the dollar. So that isn't likely to get hit particularly. Obviously, intraday, we could have quite a turn down. Remember, the other thing to remember, guys, is that we've got a long weekend in the United States this weekend. So this is a good example. This is dollar yen going back. Well, it's going back for not just this week. Zoom in a wee bit. Going back to obviously a few weeks into the end of the month here, we were through this 137, 138. We've broken out here, and it's been a strong run this week. So we've continued to move higher, 140. So there may be some profit taking going on here, hidden by the noise of the non-farm payroll data. So just be aware of that. We've got a long weekend. It's 3 days. They close Monday. It's been relatively low volumes as well. Remember, we're still in August. Good afternoon, everybody. Everybody in the camp here. Good afternoon, Subharmony from India. Hello, Christian. Hello, everyone. Central wants to have a look at gold. We'll have a look at gold. Gold's been in a big downtrend, although it's ticked up today. So anyway, just bear that in mind as the data comes out in the next 5 minutes or so. there may be some sort of strange moves on the back of this big, strong dollar rally we've had here. Let's go to the euro as well. This is parity here, the one. This is euro dollar on the 1 hour time frame. Maybe we can see that up here. Sure, we couldn't make that any bigger, isn't it? If I click that on, can you see that? Not really. No, wrong one. Click that one. No, you can actually see the price. You can't really see what it is, though. So we could do with a bigger logo for that, couldn't we? Anyway, use your own risk. Absolutely, Sandra. You're obviously talking to one of them. Tell me about FTSE, says Cabal. Let's have a look at, not the FTSE, but the US 100. Nasdaq, like the other equity markets. I haven't got Nasdaq. Why not Nasdaq on here? Cabal, I'll come to all your requests, guys, if you don't mind, once the data's come out, okay? So let's just have a look at, in fact, where are we? 5 minutes, yeah. So just be aware of that, especially in the Forex market. So here, let me just go to the daily for the euro. You can see it's a big old downtrend, new lows being formed. This is, zoom up a bit. Here's parity here, the 1 for 1, €1, $1 here. We've been through it and we were under it considerably here. 1, 2, 3, 4, 5, 6 days consecutively closing under the parity level. It's a big psychological number that we bounced over it for a couple of days. And here yesterday, big down day again yesterday. Strong PMI data, strong relative jobs data yesterday as well. So the data's been relatively strong out of the US compared to certainly the European zone, Eurozone. We're back to this parity level, more or less parity. There's a blue line ahead of the number. So Euro's been bid this morning ahead of parity. Yeah, we're waiting for NFP. Cabala, I'll come to Nasdaq. Don't worry, I won't forget you. But everyone wants to be seen. Savage, good afternoon. Good afternoon. Good afternoon, everyone. Labour Gang, good afternoon. Hi, everyone. Good afternoon. Yeah, and Rex has nailed it. We're waiting for an FP. So headline, as I say, is expected around about the 300,000 level. Unemployment expected not to decline, but if it does, that'll be just another strong indicator. So if we get a big beat today, let's assume like a bit of a surprise like we had last time. I'm sure that's going to happen this time, but we'll see. If we get a big beat, that will show that jobs are being filled. Okay, so they're being filled. There's not vacancies, but they're being filled. People are getting jobs. That will ultimately be that might add to the calming of the Fed, or the pressure for the Fed to perhaps move 75 basis points. At the moment, yesterday it went to the likelihood of a 75 basis point rise in September. In September now, aren't we? And in 3 weeks' time, 21st is when they meet. 20th and the 21st, Wednesday the 21st is when they announce. That went to 77.1% at one point on the Fed funds futures yesterday. It's around about 70% now. So it's still pushing to that 75 basis point. So there have to be a major shock in the jobs, a major weakening for that to perhaps them to step back off that tightening cycle. But it looks like certainly another 75 basis points is coming. There's still plenty of data to come before. Obviously, this is the key one today. But there's still plenty of data. We've got CPI on the 13th. We've got PPI the following day. We've got retail sales, consumer confidence, some housing data, obviously, is the normal week. And then the last big data point is the home sales and the existing home sales, pending home sales, in the week of the meeting of the Fed. So this is the key one. Next one will be the next one is the CPI data on the 13th of September. So watch that in particular as we move forward. And then it's obviously the announcement itself. So data is obviously broken, as we can see the market moving. Let's just go down to this 5-minute chart, see where we go. So euro is bid at the moment. So the data has just come across. So we're back through parity. This is only the 5-minute chart on the euro, guys. So let's have a quick update of what the numbers come through. So earnings has missed. We've got a miss, basically. Let's just run through it all. Hours has dropped off. The headline number has come in around about, I'm saying it's a miss, it's 315,000. The previous one has been revised down to 526,000, but that's still a strong number, to be honest, 300,000. It's in line with what we were expecting. Euro's been suppressed here on the fight. It started to pick up a bit. It's broken out, so we might have a bit of a rally here on the euro, the weaker dollar on this, because the rest of the data sitting behind the headline is a bit weaker. Earnings has come down a tad. It's 5.2% from 5.3%, so it's flat to what it was last month. Unemployment rate, interestingly, on the U6, which is the wider unemployment, has actually ticked up, which is interesting. And the unemployment rate has ticked up as well. So it's showing a bit of weakness here. So instead of going to 3.4, we've leaped up 2 basis points to 3.75. So that's actually quite a hike, and the other earnings have missed. So that's actually quite a weak set. But remember, we had this big blockbuster last month, and this is only one data. So initially here, as you can see here with the euro is responding positively. We are expecting 75 basis points from the ECB next Thursday as well, but more on that in a minute. So this is the number. So let's just recap the numbers. Headline for non-farm payroll for September is has come out at 315,000. Expectations are around about the 300,000 level. Some experts have had it really low, 200,000. Big wide variance again. We had a big wide. Some were saying as low as 75,000. Others were saying 450,000. So quite a wide variance again for this number. It's coming bang more or less on target, to be honest, a bit ahead of expectations. But the underlying data, I say, is all come in a bit weaker. The headline will be the unemployment rate ticking back up. So that might, which is why the dollar's weakened, that might add to the idea that they might not go with the 75 basis points. But it would be interesting to see where the Fed funds futures rate finishes today. But as I said at the beginning, lots of profits have been taken. If positions are still open from earlier in the week, we've got the daily. So you've got a sort of sideways action, but generally the dollar's bid. It's 4 hour here. This is obviously waiting for the payrolls on Friday. So euro had moved down, remains down. Euro's sort of got a bit of a bid today, as I said, from this floor down here at 99.10. We spiked to yesterday after the better than expected PMI data and the what was the other data yesterday? I missed that. And what was that data? It was CPI. No, it was European CPI. It was and ADP the day before, wasn't it? So it was PMIs yesterday. So yeah, we're back over parity, and we're off and moving here. It's 5 minutes. That's 1 hour. So. Euro's up. Sterling has also not got the lift you might have the euro had here. We're at 115.70, and yen might have indeed come off a bit more. It hasn't. Still holding. Comfortably holding 140 at the moment. Let's put that line in there for us. So let's have a look. What you want to have a look at. So euro. Yeah, it hasn't really had enough to move let's put that in properly. To move dollar yen below the key 140 level, but so let's put that 140. So we got okay, there we go, close. So 140. Let's move it here for yen. So dollar's weakened a tad, but let's have a look what we're looking at for you guys here. So Offensive, good afternoon, my friend. Sachin, good afternoon. Right, first let me just go through all of these. Let me start at the top. Who was asking first? Gold, says Sanjeev. Yeah, gold, two big lines in the sand for me now, 1688 and 1680. Sanjeev, where's my gold chart? Here it is. 1688 here and 1680, the bigger support down here, but we're back through 1700 today. So we've been tracking lower all week, and indeed not just all week, but for a while now, having this top at 1800 at the beginning, mid-August level. We couldn't get over 1800. We've been moving lower ever since. So back to test the 1700 level. Here's 1700, the blue line on here, and we've been under it half of yesterday, half of today, and we've breached it again. So the moment gold's relatively well bid today. It's been trending higher today. We're above the fractals highs, or we're at the fractal highs following NFP here from yesterday. So we're pushing to new highs. Yesterday's high was the open, which took us to 1712. So 1712 is the next line in the sand today for 1711. That says no, 1711.50 say for gold today, and then back perhaps into this channel from earlier in the week at 1770 to 1725. The 200 hours, it's all the way up there at 1728. So gold's relatively well bid. It's been followed through from the weaker dollar from the non-farm payroll data, so that looks steady on the intraday basis. But if you go up to the daily time frame, it still looks very weak, or is very weak. Doesn't look very weak. It is very weak. It's under its 200-day. The 200 days all the way up there at 1815. The 50-day moving average is all the way there at 1768, and the midline of the Bollinger Band is there at 1753. Bollinger Bands are moving open, so we've moved down this week. We've bounced so far today, so can it hold it? I'm not sure what those green lines here are on. Is this the 5 and the 9 on here? No, it's the 30, and that's the... what's that? Yes, the crossing 5 and 9 there. So we're still under the 5-hour moving average, basically. Sorry, that's the 5-day moving average. So we remain to the downside this week for gold. Sanjeev, my friend. And you're right, yeah, 1765. Yeah, well, for me, it's 1768, which, 1688, which is the, zoom this in a bit, which takes me way back. Sorry, go to weekly and zoom it up. So 1688 was a key support area here on the weekly chart. See the red line here at 1688? That's the 200-week moving average. So that's a key support. Below that is the big psychological 1680, which is where we got to in our summer low. This is our summer low here in July at 1680 during July. So still biased to the downside. You can see on the weekly chart, very much biased to the downside. Gold with the stronger dollar in the higher time frames. But today we've got the gold bid, and it's testing yesterday's high here at that 1711.50 zone. So best of luck if you're with that. That's all right. So Kamala was asking about Nasdaq. I don't know if I've got the Nasdaq on here. I've got the UK one. I don't know. I see the Nasdaq this one. I should have the USA 110 year 5. No, let's just bring in Nasdaq chart. There we are. Nasdaq daily. Obviously, we've moved down, rejected that 200-day moving average. We've talked about this before. Didn't get to it here. It's the weakest of the major indices. We're under the 50-day moving average here. Cabello. And it's now 1, 2, 3, 4, 5th day under the 50-day moving average. We update yesterday. We closed positive. The S&P was up a tad yesterday, about 20 odd points. Nasdaq was also up yesterday, so we're up today on the weaker dollar, 12,900. So we're under the key 13,000. More importantly, 13,000 is all the way up here now. It's 13,000 for the Nasdaq. Remember, this is the futures chart here. So numbers are what we see here, and the key 13,000 here now sits here right on the middle of the Bollinger Band. So the 20-day moving average is where 13,000 sits. Again, you can see it's a classic little Bollinger Band squeeze we had here as we went lower. The move higher didn't happen, and this squeeze wasn't to do with this move down. And then we followed through very significantly here on the 26th, and then we breached a couple of days later. The following day we gapped and then closed below the 50-day moving average. Absolutely key for many traders. So for the Nasdaq to move up, it needs to breach 12,560, which is the 50-day moving average, and then the 20-day moving average. So again, they're out of alignment there. So we've got the 200 up here, the 20 here, and the 50 here. I'd like to see the 50 back up, or the 20 back above, back below here, if we're going to go low. So many are saying the June rally is over. Others are saying this is a buying opportunity around about this 50-day moving average level, but we're significantly under the 13,000 level. So, Cabela, I don't know what time frame you're trading on, but that's the higher time frame for for the Nasdaq. Sachin's asking about euro buy or sell. Well, the immediate reaction to the NFP was a bid, wasn't it? Euro went up. We saw it spike in that 5 minutes. If we go back to what time is it? It's not. If we got the 5 minute chart, you can see a big positive spike in the first 5 minutes. Big divergence here with the opening up of the Bollinger Band on the 5 minute chart. But we rallied. We got to 10:03, 1003. We couldn't get any higher, and turned down quite quickly. A little less clear. It's not gonna. I mean, it's an inline number. It's not gonna change the Fed's outlook. It's just there's some signs there with the unemployment ticking up by 2.2 of 1%. That's probably the thing that's going to get most analysts chatting today, not necessarily the headline number, that rise of unemployment to 3.7%. But historically, that is still very, very low. 3.4%, 3.2%. They're the levels very, very low. That's virtual full employment. But that's ticked up a wee bit. So that's, there's nothing wrong with that. That's relatively healthy. But remember, the shift or the re-emphasizing of the focus on the inflation, the costs in the US economy is what Powell concentrated on last Friday. And that's what continued to add to the rally in the dollar. So NFP, it's quite important, obviously. It's a measure of the jobs. Still quite strong at 300,000 a month. Obviously, we had a massive blockbuster last month, but that's held up as well. It hasn't been revised down of any significance. It's been revised, but only to 526. So big, huge surprise last month. This month, more or less in line. And again, it shows the disparity between the ADP number, which was half what was expected, and the non-farm payroll number again. It's the underlying data that's a wee bit softer, which caused the initial softening of the dollar, and that's coming off a wee bit now. But we are holding parity here against the euro. Obviously, now these forex players will be now focusing on the ECB. All the euro players focusing on the ECB on Thursday, when again another 75 basis points is expected, and again the following month from the ECB. The ECB have been relatively quiet. Ms. Lagarde's been relatively quiet in the scheme of things and the discussions that are going on. We've got this massive, massive energy crisis in Europe. We've got huge inflation across the piece. We've got Germany with 40% of its gas imports coming from Russia last year, obviously trying to desperately realign their supply. They've done much better with that than expected. Storages are much fuller than they expected at the end of August. So that's helped ease the gas price. And then this is what the ECB do. There's going to be a finalised meeting on the 14th of September. Mr. De Leon talked about yesterday about what they do. Do they disconnect the price of gas away from the price of electricity? Do they put a price cap? They haven't got a price cap in Europe. Do they introduce price caps? That's all being discussed. So we'll see. So Bozo's asking about. I'm not going to put GLAIM Forex. Okay. This is dollar yen, guys. Sibus is asking about. It remains bid, and interesting here that one out. Let's start on a 5 minute chart. We saw a big move down for dollar. We went under 140, but here now, I don't know what's being said, but it's only on the 5 minute chart, obviously, but we're back to 140.60 here on the yen. So it's certainly bid and remains bid. That immediate shakeout's been lost. So this just keeps going up. We're up for the year, interestingly, for 2022. Dollar yen is up 22%. It's a huge, huge number. These are 1998 financial crisis levels, 24-year highs here for dollar yen. 140 inevitably brings in the chatter about 145 and even 150. But it's been a huge run for dollar yen from these lows down here at 132. Just at the end of August, this is a daily time frame, guys. This is less than. Just a few weeks ago, this low here, this massive rally, this test down here of 132. This is back at just the 11th of August. What a massive rally. Dollar yen has been under. Even at the beginning of August, we went as low as 130.40, but huge. It was intraday, obviously we held 131. But massive rally here for dollar yen, and again, no signs from the Bank of Japan or the government of Japan about doing anything about this. It's from Suzuka, the finance minister, was talking about the yen has weakened too far, but there's no sign. Well, I can actually say that too far, but indicating that it's gone too far. But and it's not just against the dollar; it's against other currencies as well. So yen remains to the upside. Tundu, I can't tell you what to do, buy or sell. Not allowed to do that. You should have a system that tells you what to do. Here, if we were using this Bollinger Band strategy, you might have gone long, but you've been taken out quite quickly here on the 5 minute. The 1 hour chart remains long. It's stuck at the 50-hour moving average at the moment, but that's been trending long all morning. You might have taken a long position here as we've gone into the upper half of the Bollinger Band. You might have taken a long position here as it's gone over the 200-hour, cashed out at the 50 moving average ahead of NFP, but that's still bid. It's and then the key line is obviously this blue line here at parity. So it's been long today, and it's still biased to the upside here on that 1 hour time frame, because we're above the 20-hour moving average, which sits there at .996565. Here on the 1 hour, you can see this move, the Bollinger Band, the signal line's been rising from this turn here yesterday as we went over. These moving averages crossed. That would have been your entry here. So that's been long. So you're still long. We haven't closed on it. You might have got back in here and you're out of the money at the moment, but you would have probably taken that trade at NFP. But it remains up to the upside. And again, it's in anticipation of what the ECB may do next week now, I would guess. Remember, as I say, it's a long weekend for the US. There'll be lots of, as I said at the beginning, there could be lots of profit being taken from the move this week ahead of the long weekend. So and they're using the excuse of the volatility of the non-farm payroll data to hide some of their trades. That's what the players do. Sterling, Ronald, is woeful. It's been down. There's 115. We tested 115 yesterday. Incredible move. It's just getting weaker. I mean, it may pick up. The uncertainty about lack of prime minister hasn't helped. But 115, 120. It's not even on the chart here. This is 118 here on the. This is a 1 hour time frame, going back a few weeks now. But I take this up to the daily time frame. You see that it hasn't been. It's been, as with all dollar crosses this year, it's been under the cosh. Here, this takes back virtually the beginning of the year here at 136. And the lows are getting lower, classic trend. The highs are getting lower. We've consolidated and then moved down, consolidate and then moved down, hit a floor, retrace, but then consolidate and then move down. And the move down here in August has been brutal, absolutely brutal. Johnson resigns. It's pushed out. It's the low volumes, but look at this. This is the daily time frame. This is continuing. So 115 obviously then brings in 110 inevitably. Parity's a bit of a butch for sterling, but this remains very much in a big, strong downtrend. On the higher time frames here, on the daily time frame, the 20-day moving average, one of my key trending indicators, sits all the way up here at sits all the way up here above or under 120 at 118.85, and the key psychological, as I was saying, 120 levels all the way up here where the 50-day moving average hits this blue line. So it's huge move, 500 pips just from the break of the 15. But there's the 20-day moving under the 50. That's negative, and they're all nicely aligned there, aren't they? This is the 5 and the 9 moving averages on the daily time frame. That's trending lower. So the trend remains to the downside, Ronald. Intraday, we might have had a bit of a tick up because of the, but we haven't really, have we? No, we went up and then we've gone down. So sterling remains a wade. It's much more of a move for the euro ahead of the ECB. Remember, next week we've also got the Bank of Canada and the RBA, the Bank of Australia as well. Sell the dollar, use yesterday's lows. Interesting. Yes, I can't really argue with that, my friend. To buy, okay. Well, we'll see. We shall see. Which trend are you using on your charts? Can you share? Of course I can share, Neo. That's what I'm here for. This particular chart setup here on this particular workstation, let me just go through what's on here. We've got the red line up here, which is the 200 period simple moving average. The blue line, the dark blue line here is the 50 period moving average. So here on the 1 hour time frame, that's the... So here on the 1 hour time frame, that's the 50-hour moving average. That's the 200-hour, that's the 50-hour. And then the Bollinger Bands are just a normal default setting. So it's 2 standard deviations. The upper line is 2 standard positive deviations. The lower line is 2 standard deviations from the middle line, which is the 20 period moving average. So the grey line here, the middle Bollinger Band, is the 20 period moving average. So we've got 200, the 50, and 20 upper and lower Bollinger Bands, which measure volatility and also trends. You can see the lines are pointing down. We've got a bit of a squeeze here. Then we move down. We've got a bit of a squeeze here, and then it actually moved up there. Then we've got a squeeze here. It's a bit late, and it moved down, didn't it? So squeeze is a key. This is obviously before the non-farm payroll here today, and we've gone sideways, so gone up. So yeah, that's providing resistance at 50 period moving average on top of the Bollinger Band, and then others. The other lines are on here. These are faster moving. These are the EMA. So the golden line is the 9 period EMA, and the green line is the 5 period EMA. So we can use this on an intraday basis for taking shorter term trades. So that would have broken long as it's gone into the upper half of the Bollinger Band crossing, making sure that the 5 and the 9 have crossed, because sometimes they don't. The indicators below here, this is the MACD, the MACD, the moving average conversion divergence tool, the MACD. And again, that's default setting 12.26.9. We've got an oscillator here on this chart, the stochastic. This is set quite tight and fast, this one. This is 533, the stochastic. So we're looking for the crossing of the D and the K line to take positions, ideally over the 80 level when we're oversold, which we've never been oversold. That was a short trigger there, right on. So we went to the nicely corresponding with the 50-hour moving average. As this crossed, and that's taking that, you're taking that short down there. You might take the long there as it's come out of oversold. Anyway, that's the stochastic 5 and 3. You can see behind me. And then this blue line down here, Neo, is the RSI. The RSI is currently slipping. You can't see, but it's at 42. It's neutral. It's been sort of flattish here. So that's the settings on this particular system. So you can use the crossing moving averages to take a position, whether long or short, and then use some of the other higher term moving average for setting your targets or resistance levels. And the little arrows here are the turning points, the fractal highs and fractal lows here, and they're formed. So quite a lot of indicators on here, to be honest, but that's just what's set up on this particular workstation today, Neo. So I hope that's answered your question. Looks like dollar is still strong long-term or mid-term. Absolutely, Neogos. There's nothing to change that trend. I would strongly agree with that. Obviously, we had an update today against the euro, but if we look at the dollar index, remember the dollar index is made up of 6 major currencies, 5 major ones plus. I said this morning, and some of my Swedish friends got a bit upset, including the Swedish crown. Makes the 6th one, but the vast majority, the weighting of the 6 is biased towards the big ones, particularly the euro. The euro takes about 50% of the weighting of the index. So it gets a lot of criticism, this, because it's a very narrow measure of the dollar. But even against this index, you can see what a strong rally it's had. This is on the daily time frame. We've got, the weekly time frame. It's just been unstoppable. This is going back to the spring of 2021. So it's, dollars being bid, hasn't it? Dollars being bid, and here we are, 109. And again, this is the weekly chart, in fact. So yeah, if we got to the monthly chart, we're at 20-year highs here for the dollar index. This is the monthly. So strong 2021, massively strong 2022. Where's it going to end? Well, we can't tell yet. Don't bet against it. It does look very steep, but it's looked very steep all year, this particular chart. But you can see the moving averages are still very much aligned. The 20-month, this is a 20-month here across the 50-month moving average just last month. So we're a bit approaching overbought. You'd argue the RSI here, just behind my head in the picture here, is at 76. The stochastics, here, interestingly, there's a good example of things can remain overbought for much, much longer. Stochastics here have been in the technical overbought area since since summer for a year, well over a year. Look at this. It's interesting, isn't it, for the dollar index? But the trend is your friend. Dollar's bid. Fight it or go against the trend at your peril is always been my mantra. Okay. NFP, what's this saying? NFP came above forecast. Is it enough to make the Skrilla strong? The Skrilla. No, Skrilla is, excuse me. The headline, the headline was better than expected, but not massively expected. It was 315,000 compared to 300,000, so more or less in line. The strong bit was the fact that last month's didn't get revised down. 528,000 last month. It was revised down just by 2K to 526,000. That's strong. The headline is strong, but the weakness came from the drill down data. Earnings were 5.2% from 5.3%, but they're sort of flat like they were last month. They were expected to tick up a wee bit. They didn't. But the other the weak number that caused the initial weakness of the dollar as the numbers came out was the fact that unemployment had rose to 3.7%. So that might say, oh, look, the unemployment rate's going up. Does it mean that people are coming back? Well, possibly, because the participation rate has gone up to 62.4% as well. So there could be something in that. But overall, it's not going to change the overall outlook for the Fed. It's still saying a relatively or a tight jobs market. There's some signs of a wee bit of weakness, but probably not enough. From the comments from Jay Powell last week to step back any of the bets on the 75 basic points. I mean, it might have come down under the 70% chance by the close of business today. But as I say, a lot of it may be just profit taking for this week and taking some money off the table. But here on the hourly side, the dollar's been down the day, but it's still holding the key 109 level, I should say. But as you say, in the current hour, the hour of the actual data has been weaker currently. Okay, but at the moment, dollar remains bid. Euro's got its head back over the parity level. Anybody made any profits? Great question, Noblest. If your system, I don't know. Trading the news is always a very difficult, particularly this particular news, because you get this massive volatility. The problem is, spreads can widen very quickly. Systems can freeze. Your internet could be a hiccup with your internet. There's lots of traffic, so you've got to be very, very careful. Trading these high volatile events. It's all right after the event saying, "Oh, look at that! I could have look." You let people say, "Look, I went long immediately and I made all these pips here," but within 10 minutes it wiped it all out back out and now it's bounced off. For me here, if you're trading this as a 5-minute trade, this still is relatively positive because the 50-minute or the 50 period moving average is held. The 20 period, the middle of the Bollinger Band is relatively held. So it's biased to the upside still, even though we've had this massive swing. So you may have made some, you might have got stopped out, you may be going long again now. So it's sort of pushing higher, euro. Where are we now? Yeah, half an hour after the data's come out. Somebody asking for something different, which is interesting. Glenzie is asking about that Aussie. Where's my Aussie? Here. Aussie, again, another one that pushed higher in this hour on the data, but again, another one that's been under the cosh of the US dollar strength. This takes us back to the beginning of the week, and we've been, again, another one that's been looping lower. Currently, a bit like the euro, we've had a better day today. We've come off our weekly lows, which was yesterday, Thursday, after those PMI data at .670 was the low here, Magwezi. And again, it's another one that's been trending higher. So here, that would have initially, if you've been trading this morning, that would have initially taken you long there. You might have got out again, if you're using this crossing strategy, well, it hasn't because we haven't crossed the 20-day. What am I talking about? Escape. So you would have gone long here this morning. If, again, that was at 11 o'clock ahead of NFP, would you have taken that trade to get out before NFP, perhaps? But you're still long. So you've gone long here, and you're trailing your stop loss up. So that remains long. Resistance on an end of hour basis for the Aussie is through here at 68.35. So that's where there's lots of resistance to the upside. Yesterday for what was that, all day, wasn't that? 8 hours, 1, 2, 3, 4, 5, 6, 7, 8. 8 hours. The basically the London session, we couldn't get over 68.35. We spiked through that initially on payrolls data, but we're starting to tick up again. So that's quite a positive trend to the upside with resistance at 68.35 for Aussie, my friend, on that hourly chart. If you want to look at a smaller time frame, let me know. Where are we? Nabil's asking about gold. Is it buy or sell? Well, if we've got a weaker dollar, it should be biased gold higher. And here on the 1 hour time frame, it is biased higher, but it's in a big downtrend as well. But interestingly, it's broken. I think we talked about this earlier, didn't we? We've broken over. So again, it's another one that's gone long this morning. That would have, on this strategy here, that would have taken you long here. Again, this is at 7 o'clock. Gold went long at 7 o'clock, and it's been long ever since. So that's trailing up. We ran into the 50-hour and stalled ahead of NFP, and now we've lifted in the hour before NFP, interestingly, to that 17.1150 area, which is our high from yesterday, which was actually our low for the previous day. You see what I mean? So Tuesday, Wednesday, we were down. Thursday we went down again. Friday we're ticking back up. So we're back to where we were opening, or we've tested the open of yesterday and the low of Wednesday here at 17.1150, and we still remain bid, but we've got a down candle currently. So that remains long. And again, if you've been trading this, we've probably tested this. We'll go down to should see some pin bars. No, there's no pin bars at all. No. So it's just simply the spike of non-farm payroll data here on the 15-minute chart. And again, that's run up, but it's down a bit. So it's looking still a positive candle. Can't make a decision on this current candle because it's not completed yet, but we've been, it's up. Support is there at 1,750 cents. And these moving average are still positive here on the 1 hour time frame, Nabil. Nabil, is that the same Nabil? No, it's a different Nabil. But yeah, there we go. Gold's angling higher, but we're in a downtrend, guys. You're going against the trend. Look at this, big downtrend. Update today, but the big downtrend. So be careful going against the higher time frame trends. Noblest, Euro will continue buy. There's a chance of order flow in H4, maybe, quite possibly. It's got oversold, you could argue, Euro here on the 4 hour. Let me have a look. Quite possibly, but really here the 4 hours, it's channeling, but bias to the upside. So we've been positive for 1, 2, 3, 4, 5 candles. Big one, the last one. For me, we need to get over that line, 10029 or 10030. So 1.30, 0030 is the resistance here on the 4 hour and certainly intraday. Then above that, we go back into this week areas. So yeah, that's biased. So we could get a lift if we get some more bullish, hawkish talk from the ECB over the weekend and into Thursday's announcement. So, but parity, it's a long way down parity. So have we had enough of trading under parity? Here the daily would say, well, it doesn't want to go under 99.10, does it? This is the end of August. Remember, August, low volumes, incredibly low volumes. Next week, we get back to normal after Labor Day on Monday. So more volume will come in. So are we going to see a pull away from parity to the upside? Parity is this blue line here. Or not? Well, the lines in the sand for next week is that, for me, is really the 20-day moving average at 10085. The 50 hour is all the way up there at 10118. 170. Sorry. 10118 is where the 50 day moving average sits. So we'll see. what happened to their order flow potentially. We'll see. Options expire. I've just expired actually. So anyway, we're moved up. Samuel, Sterling, guys, I can't tell you what to do when it comes to actually placing trades or buying or selling, Samuel. So please don't ask. But the trend remains to the downside. This is the let me just get you. The trend remains. This is the daily, so that's down. Okay, the 4-hour is still down. The highs are getting lower. The lows are getting lower. The 1-hour is down still. We've had a bit of consolidation today. We spiked up, but again, this current is still down, so that's still weak. So 115.00 was tested yesterday. This looks weak. It hasn't had the bounce that the euro has. So sterling looks like it's a weak one. It's in the under half of the Bollinger Band. Rejected the 50-hour, rejected the top of the Bollinger Band, and we're now under the 20-hour moving average, and we're moving down. So on the candle size, 115.20 is an area to perhaps test if this is going to go and move lower into the US Open and the US trading session. US markets open, cash markets open in about 25 minutes. So that looks weak to me. Although here, as you can see, we've been trending higher all day. The MACD delaying, but that's rolled over, not got oversold, but it's come down. Some support is there. That would have been long that's taken you out, and that would be this on this particular following this strategy. Samuel, tell you and give you an answer. This is short. Okay, on the 1-hour time frame, it's short. It just triggered at the end of 4 o'clock 5 minutes ago. That's triggered short in a big down candle to the downside. Bradley, gold has been tracking long all day. Here we are, and it remains long. That went long here at 7 o'clock this morning on this particular strategy, and it continues to track higher. You should be trailing your stop loss up now. You might want your stop loss just below that 50-hour moving average. It's been in to test it this current hour, so that looks long here on the 1-hour time frame. Bradley, no losses by you're talking euro, I think, aren't you, my friend? Dontinga, same with gold. It's trending higher, but as I said before, careful, you're against the trend. Big move down here for gold. This is the daily time frame. We've got a good strong up day today, but we've had 3 strong down days, so it might have ran out of energy as we've gone through 1700. We've tested the key 1688, and the more important below that is 1680 itself. So 1688 and 1680 are the 2 lines in the sand that's providing support in the longer term, and the key psychological 1700, which is this blue line here, we breached earlier today, having triggered a long trade here at 7 o'clock this morning. So that's rallied up. Intraday, we then hit resistance here and broke through it quite nicely. So gold remains big to the upside, my friend. Same with Pips Empire. Gold is going up, Ronald, or Pips at the moment. And whether it continues like that, we shall see. But as I said right at the top of the shop, guys, a lot of this will be players, people that have been long for a while, big players, small players, dollar, I'm talking about now, long dollar, perhaps covering their costs and their charges or whatever it is, their profits, bagging their profits for the long weekend ahead. Remember, we've still got the US session to come, so lots of liquidity still to come. So here, euro remains big to the upside. Sterling, on the other hand, remains down. Yen intraday remains weak as well. So the dollar's up against it. It's come over at this moment, but it's still above its 20-hour moving average. The euro is above its 20-hour moving average and looks like it's bid. Sterling, on the other hand, is below its 20-hour moving average. It's trying to turn around now, but that looks weaker. Any more? Gold is above its 20-hour. That's bid, that one. Let's have a look at the Dow. The Dow futures has come back to life. Hang on a minute. This is the 4-hour, the 1-hour. Yeah, it's lifted today. So we had a positive day yesterday from these 4 down days. Huge down day here on Tuesday. Big shakeout. We've managed to breach and hold the 50-hour moving average here for the Dow. The 20 here, the moving average, the midline of the Bollinger Band, I should say, has moved up and crossed the 50, so that's a positive. We've had a positive first candle here, and we're currently trading at 31,909, so 32,000 becomes key. Saying, I don't know what that means. Facebook, we've got some Facebook guys. Okay, so the saying I can share. Not sure what that means. So again, see how an example of the squeeze on the Bollinger Band here. So sideways, flat, and then we've started to expand as we move down nicely. See how that's come in, it's moved down. Here we squeezed in, we pushed up, then we moved down, now we've legged up again. So the Dow looks like it's heading for a positive open at 32,000. The Nasdaq, similarly, interestingly, Nasdaq has breached its 200 hour, so big, strong Nasdaq support here. There's let's put the for today, sideways because of nice breakout there. Nice. There we go. See the breakout there. So see those fractals through there, coalescing with the top of the Bollinger Band there ahead of non-farm payroll. That's a positive breakout here on the NFP data, and but we still remain below 13,000, but we are trading at 12,300%. So Nasdaq's positive on the break of the 200-hour moving average here on a few minutes ago or 15 minutes ago when the candle closed. So that's certainly up to the upside as well. So it looks like a wee bit of the buys have slipped to a bit of a weaker dollar as we head into the open. So Euro's trading at 1.00114 on that general positive non-farm payroll with some caveats. Remember last month it was very, very straightforward. It was a big beat across the board. It's much more nuanced today. Caught 50 pips on the Nasdaq. Well done, Puma. Just now, very good. So what was the Nasdaq? Yeah, that's nicely. That's the 30-minute chart. I don't know what you're trading it, but again, it was it's been. You obviously caught this rally here as it's broken out. Again, depending on what time, I don't know what time frame you're trading at Puma Cross, but it looked okay. It would have only been on the action of this. For me, it's not really trending. It's just that's quite positive candle there to the upside. That would probably be enough to at least grab some of this up to the upside. Obviously, the issue is where it goes now. It needs to break out at the top of the Bollinger Band. That's a big resistance there at 12,400. And then I'd look back to this resistance through here, which is a bit higher at 12,455. So that's your next level really through there. I don't know, you've obviously been in and out, Pure, but next resistance there, that 12,454. This high that we couldn't break. So absolutely a clear, strong resistance just below the 50-hour moving average here from Wednesday. From the big shakeout we had on Tuesday. So are we going to get back there today for close of business? We'll see. But certainly that be a target level having broken out of here. Is the breakout going to continue? Can't really tell, but support is down there at the 20-hour moving average, which sits at 12,287 for the Nasdaq. Okay, any more questions, guys? Anybody I've missed? I don't know how many of you here. I've got nobody support you as well. So gold, euro, we talked about gold. I think I've caught everybody. Just bear with me a second, chaps, ladies. Good. Okay. So I'll leave it. Let me just review the data at an hour or so, 45 minutes ago. Yen, dollar continues pushed higher, new 140. Review of the data. Non-farm payroll. Headline in line or better than expected. Tad better than expected, not massively expected. 315,000. Consensus was 300,000, so it's better than consensus. And last month's was revised down, but only a very, very small amount, only 2,000. So that huge leap we had last month has hung around. The softness was in the unemployment rate. Unemployment rose to 3.7%. The wider measure of unemployment in the US, the U6, which many labor economists use extensively, is up by 3 ticks from 6.7% to back to the psychological 7%. Earnings were weaker than expected, but still very strong at 5.2%. And weekly hours earned, participation rate was 62.4%, so that's better than expected. So more people back in the labour market, or more. Well, the jobs available mean that the participation rates ticked up. The monthly rate fell from 0.5 of 1% to 0.3 of 1%. It was expected to come in at 0.41%. So that's another weakness in the earnings. So that's showing some cooling. So maybe the Fed may not be as aggressive. But as I say, there's still plenty of data to watch before the Fed have to make their final announcement on the 21st. We've got CPI on the 13th. We've got PPI the following day. Retail sales on the 15th. Consumer confidence on the 16th. And then a glut of housing data the day of their meetings. So CPI is the next big data point. Remember, PCE is the Fed's preferred measure of the Fed's preferred measure of inflation. And there's not another reading of that until after their meeting on the 21st. The CPE comes out on the 28th, I think it is, a week later. But anyway, CPI is the next big one to watch on the 13th. So there we go. Another non-farm payroll out of the way. We've got a weaker dollar overall. Let me leave you with the euro. Here, euro chart continues to tick up over parity at the moment. 1.0010 we got 2 so far. 1.0030 is where we spiked on the initial announcement. So we're still tracking higher. Tad weaker dollar, but the yen pushed to new 24-year highs. It's come off that 140.80. We're down at 140.27, still historically high. And the weakest of them all is sterling. We're at 115.50. Actually, it's bounced back a wee bit. So just taking the noise out of my. It's just proving me wrong, turning around in this current hour at 115. So it's found some support post. Actually went down to test 115.25. So again, that remains relatively weak in the well. They're all weak against the dollar in the higher time frame. So that's all from me today. Take care, everyone. Stay safe, and may the pips be with you. Busy week next week. We've got the RBA on Tuesday. We got the Bank of Canada on Wednesday, and as I said many times, we've got the ECB on Thursday. OPEC, don't forget OPEC meet on Monday. US and Canadian markets are closed on Monday, so a long weekend for North America. But OPEC have got their meetings, online meetings, on Monday as well. So plenty to get your teeth into for next week as well. So stay safe, and we'll see you all again next week. All the best, everyone. Bye-bye.